It's a broad-based sell-off on Wall Street. The Dow closes nearly 500 points lower, while the Nasdaq tumbles over 2%. Investors now await the July jobs data due later today. Asian markets are also trading with deep cuts led by the Japanese Nikkei. The GIFT Nifty is also implying a gap down start for the Indian markets. Brent crude continues to hover near the $80 a barrel mark as concerns about slowing demand stir concerns of a possible supply disruption arising from the conflict in West Asia. Meanwhile, gold prices edge lower following an uptick in the US dollar. ITC reports good internals for the June quarter. Cigarette volumes come in line with expectations. However, the paper business revenue was a miss. Tata Motors' first quarter numbers beat expectations, but the outlook on global demand and JLR remains cautious. And in key earnings to track today, Titan is expected to see 10% revenue growth on a year-on-year basis, while Britannia is expected to see around 7 to 8% volume growth on a sequential basis. Also, watch out for numbers from LIC Housing Finance and UPL. And the much-awaited Ola Electric Mobility's IPO opens for subscription today and will close on the 6th of August. The price band is set between 72 to 76 rupees a share. The company has already raised 2,763 crore rupees from anchor investors. It's the final trading day of the week, and a screen of red has greeted us this morning. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring this morning. And as I just mentioned, it's a screen of red that has greeted us. It's a sharp sell-off across the Asia Pacific. The Hang Seng down 1.5%. The Taiwanese index is down 2.5%. But the losses are coming from Japan, and that is where the Nikkei is trading with losses of as much as 5%. And it's the least leading the losses on the Asia Pacific index, and that is extending the losses that it made on Thursday. Remember, the Japanese index was down 2.5% on Thursday, and now add to that another 5% fall that has come in. Even the Topix, which is the broader market index in Japan, is trading with losses of over 4%. Even the Korean indices, the Kospi, is also trading with losses of over 2%. So it's a sharp sell-off across the Asia Pacific. And pull up the GIFT Nifty as well, and that is not painting a pretty picture either. 190 points. Now almost 200 points is the implied open as per the GIFT Nifty. Remember, we scaled 25,000 on the Nifty yesterday. It'll be interesting to see after this gap down as to how the markets react to this. But a sharp sell-off across the Asia Pacific, and the GIFT Nifty also indicating a negative start for our own markets, and that is because the handover from Wall Street was pretty poor as well. The Dow Jones shed nearly 500 points. The S&P 500 slipped over 1%, while the Nasdaq also fell over 2% overnight. CNBC's Megan Casella gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes Thursday as initial jobless claims for last week came in higher than expected, and a key manufacturing index showed slowing economic activity. The Dow lost 495 points, the S&P 500 was down 76 points, and the tech-heavy Nasdaq dropped by 405 points. Now, that new economic data, it's stoking fears about a possible recession. Initial jobless claims rose the most since August of last year, and a key barometer of factory activity in the U.S., known as the ISM Manufacturing Index, came in at 46.8%. That was worse than economists expected and a signal that the economy is contracting. On top of that data, the 10-year Treasury yield dipped below 4% for the first time since February. And the newest entry into the streaming wars has a price tag. The new streaming service from Disney's ESPN, Warner Brothers Discovery, and Fox will start at $42.99 a month. Venue Sports will feature all three companies' portfolios of live sports, including the NFL, NBA, NHL, and MLB. The platform is expected to launch this fall with a 7-day free trial, but it is still pending antitrust review. That's what's happening here in the U.S. Now back to you in Mumbai.
Let us also now listen into some important opinion coming in from market experts on the Fed's decision to keep interest rates on hold, and also the possibilities of a rate cut in September.
I think there's been a strong case for rate cutting for quite some time. The economy is resilient, it's strong, it's fine, it's navigating through. But why take the risk? I think the Fed has already achieved its so-called dual mandate. We're at full employment. Job market has cooled off sufficiently, and inflation, as I just argued, I think properly measured, is at the Fed's target or beyond the Fed's target. It looks like we're going to make our way through without a problem. without something breaking in the economy. Now, having said that, if they don't cut in September, that could be an issue.
Look, I think he went out of his way to say it's not a foregone conclusion, but I also think, frankly, it's far more likely than not. A couple of things struck me in the press conference. One was the revelation that some of the members had actually discussed a rate cut at this meeting, which for me was a bit of a surprise. And secondly, Powell did say that the economy is roughly in balance. And the logic of economy that's roughly in balance, not too hot, not too cold, suggests that you don't really need to have short-term interest rates in restrictive territory. So I think the logic of the argument tends to lean much more towards a higher probability of a cut than maybe Chair Powell was willing to admit yesterday.
Let's now get to the final update on the global markets. European markets closed lower on Thursday as investors processed a raft of central bank action and fresh US economic data. All major regional bourses and most sectors finished in negative territory. The pan-European stock 600 index provisionally closed over 1% lower, while the Bank of England cut interest rates for the first time in over 4 years, taking the key rate to 5% from a 16-year high of 5.25%. The Monetary Policy Committee voted for a cut with a 5-4 majority. And that's the global market action that we have. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks you need to keep an eye out for, and of course the FNO setup as well. First up, Vivek joins in to get all the market cues you need to watch out for. Vivek, good morning. It does not seem to be a pretty looking picture.
Absolutely not. And when you're talking about the screen, it's red all across. Like you mentioned, at the start of the show, how the kind of weak handover we've received, especially from global markets. Today, even the Asian markets, GIFT Nifty, all of them are indicating quite a deep gash across our own markets. Overnight, all US markets ended in the red. Along with that, even post-markets, names like Intel and Amazon fell quite sharply on the back of muted results. Oil prices fell. Brent crude almost down over 1.5% yesterday, now hovering little lower than the $80 a barrel mark. Indian markets yesterday, remember, Nifty hit the much awaited level of 25,000, but after that we did see some selling pressure. What was a little bit more worrying was the fact that the breadth was negative. In fact, advanced decline ratio was 1:2 in favor of the decline, and broader end of the markets after a while actually underperformed the benchmark indices. But quite a lot to keep on the plate today, given the fact that there will be quite a lot of earnings reactions to numbers that came in post-market hours yesterday, top amongst them being Tata Motors and ITC. Results today, quite a lot of them, Britannia, Titan, Hinzink, UPL, LIC Housing. Also remember, markets will react to auto sales that came post-market hours yesterday as well. Eicher, Hero Moto, and auto sales overall this time around has been quite muted compared to what the street was anticipating. Asian markets, GIFT Nifty, especially Japan's Nikkei, all indicating quite a deep gash, gap down for our own markets today.
Now the gap down has increased to over 200 points now. Vivek, thanks a lot for that. Over to Vamakshi. List out the stocks you need to watch out for this morning. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with ITC. The company reported volume growth of 2% as compared to expectations of 2 to 3%, according to sources. Revenue came in above estimates. EBITDA margin, however, was lower than estimates due to lower paper and agri margins. Net profit was almost flat at 4,917 odd crores. Tata Motors also reported its numbers stronger than expected. Guidance, however, was cautious. They have highlighted that JLR could likely witness constrained production in the second as well as the third quarter. The board has gone ahead and approved demerger of the passenger car and CV business as separate listed companies, and this will be completed over the next 12 to 15 months. Let's also look at some auto sales numbers that came in for the month of July. First up is Maruti Suzuki. Total sales stood at 1.75 lakh. As this is lower than Nomura's estimates. Exports picked up by almost 8.1%, but total domestic sales were down 5.3%. Eicher Motors, the next one on our radar, Royal Enfield sales were down nearly 8% to 67,265 units. This is much lower than the Nomura estimates. VECE CV sales were up almost 12.7%, and this too came in below Nomura's expectations. Hero MotoCorp reported a downtick of almost 5.4% in its sales at 3.7 lakh units. This is again lower than what Nomura was expecting. Symphony is the next one we will be focusing on. They will be considering a buyback on August 6th. GHCL has signed a 30-year lease agreement for 6,450 hectares of land for salt production in Kutch, Gujarat, and This will cater to the salt requirement for upcoming soda ash greenfield project at Kutch. NetWeb will also be in focus. Sources suggest that Sanjay Lodha, Naveen Lodha, Vivek Lodha and Neeraj Lodha are likely to sell 20.54 lakh shares of the company via block deals. The floor price for the deal is at 2,180 per share and the offer size is pegged at 448 crores. And lastly, let's focus on Morpin Labs. Sources suggest that QIP will be launched. The issue size is up to 200 crores and the equity on offer is 3.68 crore shares and the indicative price is at 54.37 per share.
Plenty of stocks as always. Vamakshi, thanks a lot for that. Over to Sudarshan now, joining in with cues from the F&O space. Sudarshan, good morning. Looks like a gap down, but what's the F&O setup looking like?
Morning, Rahman. So yesterday we saw that Nifty held on to the levels above 25,000, but it looks like that it was a short stay there, as after weak global cues, GIFT Nifty is indicating a gap down start for our market today, and currently GIFT Nifty is down more than 200 points. But if you look at the flows, it's not looking that bad. In the cash market, FIs bought shares of more than rupees 2,000 crore, while the sell figure by DIs was just rupees 340 crore. Even in the index futures, FIs bought shares of almost rupees 1,400 crore and has added long contracts of more than 18,000 and at the same time have cut short positions by almost 3,600, and this takes long exposure to almost 66% with total net long contracts to 1.66 lakhs. In the options, we saw straddle strategy at play at 25,000. 25,000 call, we saw addition of more than 25 lakh shares with a premium at 148, and on the put side, 25,000 strike, we saw addition of 25 lakh shares with a premium of 154. This brings us to resistance and support levels for Nifty. Resistance is now seen somewhere around 25,100 and support remains around 24,850. In the stocks in focus, there are 4 new entrants in the F&O band. Those are Birlasoft, GNFC, India Mart and RBL Bank.
Interesting. Sudarshan, thanks a lot for that update from the F&O space. But time for a short break here on Power Breakfast. Up next, we get you an exclusive story on sovereign gold bonds. Stay tuned. Back on the other side. Back with us here on Power Breakfast, and before we get to our exclusive story focusing on the primary markets first, India's leading electric vehicle company is all set for its IPO launch today. The Ola Electric IPO will remain open for bidding till the 6th of August, and the company also plans to raise about 6,146 crore rupees through the IPO. The price band has been fixed between 72 to 76 rupees a share, and the company has raised 2,763 crore rupees from anchor investors, which include the likes of SBI Mutual Fund, HDFC Mutual Fund, Nippon Life, HDFC Life Insurance, among other investors. And now here is a CNBC TV 18 exclusive, as CNBC TV 18 learns that the government may soon take a decision on whether to continue or discontinue the current sovereign gold bond scheme. Now, sources say that this matter is likely to be taken up in the month of September. Sapna Das is joining us with more. Sapna, what are your sources telling you?
Well, the expectation certainly is not looking extremely bright in terms of scheme continuing because, as we have been pointing out earlier also, there are fiscal costs that the government has to bear, on this scheme right now, given the fact the way the metal prices have rallied, gold prices have rallied, and plus there is a lot of tax rebate under the scheme. It also carries a 2.5% annual interest, so to speak. So, it's quite likely that a full review will be taken up in September when the H2 borrowing calendar is decided along with the Reserve Bank of India, and a decision will be taken whether to continue or not continue. So, if the government and RBI decide not to continue with the sovereign gold bond scheme, what it means is that there won't be any further issuances. That's one. Now, the second element that we also need to keep in mind is that on 2 fronts the government is pretty uncomfortable. One, of course, that is one of the most expensive borrowing tools for them in terms of financing the deficit, and also some clarification coming in that this is more of an investment scheme and not a social security scheme, say like the small savings where you have a PPF or a Sukanya Samriddhi, where the government is bound to make good whatever money that is coming in, that needs to be paid at a certain interest rate along with some tax incentives, at least for 1 or 2 of the schemes. So that's the second rationing. Third, of course, as of now, we are given to understand that there is no alternative on the table to the SGB, so to speak. But of course, a call for first have to be taken, whether it's to be discontinued or whether it's to be continued at all or not. Now, 18,500 crores is what the government has penciled in as tentative borrowings from the SGB. Now, in case there are no other fresh issuances, if the scheme does not continue, it may be just possible that this borrowing will not happen. So that could be the other likelihood. We need to keep all of this in mind, and it's going to be a conscious call between the RBI and the Government of India.
Sapna, thanks a lot for that update. We'll keep an eye out on that. Time for a short break. Up next, we get you cues from the commodities market. Stay tuned. Back on the other side. Welcome back, and it's time to say welcome back to Manisha Gupta as well, who is joining in with cues from the commodity space. Manisha, good morning. What are you picking up?
Harmal, thank you for that. I'll start with the crude oil prices, where we are seeing the prices headed for a fourth weekly decline. This is the longest losing streak since December 2023, and the weak global fuel demand concerns, weak manufacturing data that we've seen come in across globe, whether it has been US, European Union, and most parts of Asia, really seems to be weighing onto the crude oil prices. So while we are just about holding $80 for the Brent markets do believe that with the kind of demand concerns that we have, even as we do have supply concerns, it still does look near-term bearish for the crude oil prices. It's a similar scenario for the metal prices continuing. Copper has declined nearly 3% overnight. Silver fell by 1.5%. The China stimulus is still awaited on a larger scale, on a more consistent manner for the industry and construction as sectors. Until you see that happen, we will continue to see further support in prices. But there is one thing that the street will watch out for today, and that is the U.S. non-farm payroll data. That would give you a further direction until the September Fed meeting, while, of course, markets have priced in 100% expectation of a cut in taxes in the interest rates by 25 basis points. So that is something that is already factored in by markets right now, but today's data will give you further clarity for that.
Manisha, thanks a lot for that. Indeed, all eyes will be on the non-farm payrolls data later this evening. Now on to updates from the landslide-stricken district in Kerala. Rescue efforts in Wayanad continue as nearly 200 people are still reported missing. Now close to 300 deaths have been reported so far. The Chief Minister of Kerala has said that the numbers could go even higher. The leader of the opposition, Rahul Gandhi, visited the worst affected areas of the landslide last evening and has promised support for those affected. Meanwhile, the IMD has predicted heavy rains for another 2 days in the district. And moving on to updates from the Paris Olympics, 28-year-old Swapnil Kusale bagged India's third medal by clinching the first ever Olympic bronze in the 50-meter rifle shooting finals. Indians' men hockey team, having already secured their quarterfinal spot, lost against Belgium in their pool match. Meanwhile, Manu Bhaker, who won 2 bronze medals at the Paris Olympics, will compete in the women's 25-meter pistol qualification today. And rising shuttler Lakshya Sen will battle it out at the singles quarterfinals later in the day. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.